What's up, Denver? Chris Lopez here, and I have a great guest in the studio today, Paul Coe, and he started investing right before the 2008 crash. Lots of lessons learned, some hard lessons learned as well, being part of a big company that ultimately had to go bankrupt. And then he got heavy into investing himself, building a great portfolio for himself, and now is the chief investment officer at redT. So we have lots to talk about from the investing side and also some very interesting insight from what's happening in the development world around Denver, Colorado, and beyond. Paul, I'm super pumped to have you here.
Yeah, super pumped to be here. Thank you for having me today.
Yeah, so the last couple of years, I've known of redT. I've talked to Nathan a few times, and then the last couple of months, you and I have started chatting a lot more. And then just hearing you talk about the deals you've done personally, and then like the pipeline redT is building, you have got me like really excited to like learn more, and I know our audience is as well. But let's rewind the clock a little bit because I know you've had your ups and downs in real estate. So talk to us about where you began and where you were.
Yeah, absolutely. So, I grew up in Colorado Springs, and right after, leaving CU after studying economics, went directly to go work for my family's development company. My aunt had a very large real estate development company, and we had assets from hotels to office to residential, just all across the board that they've been accumulating for all of these years. So jumped right in head first. Things were great in the world. It was 2005, 2006. Everything was just rocking and rolling. The world was wonderful. And just as a young kid, I thought, hey, this is it. I made it. This is it. Shortly thereafter, of course, 2008 came, 2009 came, and 2010 came. And eventually the family's development company, filed for bankruptcy, and really just gave me a good reality check into, that there are ups and downs here and nothing's ever guaranteed. From that point, I promised myself, if this ever happens again and, where I find myself in a recession, I'm going to be prepared to be able to take advantage of this thing. So, I got a really heavy dose of real estate, development knowledge there, and eventually wanted to start, doing it myself. So I purchased a fourplex. I house hacked a fourplex back in 2010 and did really well with it. The first thing I realized was I was making more rent on the 3 units I was renting out than I was at my family's company at my job. So I said, there's something to this. And that's really what got me started on my career.
All right. So that first house, like you said, 2010, right?
Yeah.
And then that's kind of when it sprung about your investing. Like, what was the next step as, from an investing standpoint and professional? Like, where'd you go to next?
Yeah, I actually held the property for a couple of years and eventually sold it. I think I sold it for about $150,000 more than I bought it for. And at that time, I thought, hey, that is fantastic. I can go do more. I put that in a 1031 and I bought 3 other rental properties. One of them, which is a vacation rental in Grand Lake, that's tripled in value since then. We still manage that with an Airbnb VRBO, so it's been doing great. And just riding the real estate wave over the last several years has been wonderful in Colorado. So just looking to build on top of that.
And then when did you start working with redT?
So I joined redT in September of 2014. So I've been there for 9 years now.
Okay. And at that point, so you joined redT, you have these 3 rental properties at the time. Did you have other rentals as well? Or is that kind of the main?
Yeah, that was the main.
Okay, the main rental portfolio. And I know as you got into redT, your career's evolved, but also you as an investor. I want to talk about the investments you have made, because you have talked to me about some of the deals you've done personally on some like small development. They're exciting, and I know a lot of other people out there want to get into developing. So how'd you get into developing properties?
Yeah, absolutely. At redT, we were doing larger deals, and when our acquisitions teams looks at deals that are single family, a duplex, or even a fourplex, a lot of our investors are saying, "Hey, these are too small." For us, we knew these are good deals. There's opportunities here. There's ways to make money. So for me, I said, "Hey, I have the capital and the liquidity to be able to do this. I qualify as a experienced real estate investor." So I said, yeah, let me take a leap of faith and essentially hire my company to do the architecture, the development services, the entitlements, the construction, and eventually the sale. And essentially right now I've got 5 units that are under construction here in Denver. Two of the units which just went live a few weeks ago on the MLS.
Yeah, so let's talk about that the duplex in Villa Park, because
Yeah.
they said, I think so. What, a few weeks before recording here, you put that live. So how did that deal come together? Because that, I mean, probably years in the making, right?
Yeah. It was an owner that was just trying to get away from their broken down rental property. The tenants weren't great, the neighborhood wasn't great at the time, but we knew that there was a potential just being south of Sloan's Lake. So we eventually tore down the house. We agreed with the seller initially that we would buy the property once we got to certain approvals and certain permit close to permit ready. And so that allowed me to not have to carry the holding costs for it, get it entitled. And once I took it on, it took me about 2 months before redT was able to go in and start demolition and really get going on the construction.
So when did this deal first come across you? I want to talk timeline here. When that deal first come across like redT's desk?
I would say probably late 2020.
Okay, late 2020. And then when did you say, hey, I'll take this on?
Mid 2021.
Okay, so mid 2021. And that's when you started putting the agreement with the current owner saying, hey, we're going to buy this. And then when did you buy it? And when was that next step?
Yeah, we ended up buying that about October of 2022. And so we're about
so that took about a year
to get through. Mm-hmm.
Okay, and what exactly part of the phase we're doing those 12 months?
So really, I was just working with our development team. They really held my hand through the process, saying, "Hey, these are the decisions that we need to make sure that you're on top of it." I was working with the architecture team to make sure we had designs, the bedroom, how some of the things laid out. So there was a lot of hand holding. I feel like I didn't personally do much. It was just more of making decisions and providing guidance, and the team was able to give me some advice on where to go with this. So it was really helpful to have a team that I really trusted, that I work with every day.
So how did you, with that year, because you're putting time and there is, capital being invested in that, from that mid 2021 to when you closed in October 22, did you have the property locked up, or you had some type of agreement to purchase a certain price, I assume?
Yeah. We're under contract with, trigger points of milestones of when earnest money would be released and, when the closing would actually happen.
Okay, great. Thank you. So October 2022, you close on it, right? And then what happened next?
And then, we went right into construction. redT was able to jump on and build an all electric LEED Gold certified home within the 12 months. And, like I mentioned, now we're live.
Wow. So that was 12 months ago. That is a great turnaround time. Cool. And this is something I know, I've always been interested in, and I'm sure you got a lot of people, interested about this as well. Give us a high level about how this developed into your developer incubator program or incubation program. Yeah,
absolutely. What we thought was, if I, as a passive investor, can do this, why couldn't other investors do the same? When I started talking to a lot of my investor friends and colleagues, they were doing a lot of single family rentals, buying one a year, and that was their goal to retirement. And for me, I just thought that was really slow because people are saying, I own 10 rentals, but why do I feel broke all the time? It just it's just not, doesn't feel great. So we thought, why couldn't we do the same program where we can help some of these slightly experienced investors to get into ground up development, where we can do the architecture development, the construction GC, and the sales, and allow the investors to jump in on an opportunity where they really couldn't jump in on an opportunity like this. Typically we would offer projects that are close to permit ready, and just to be able to take a lot of risk off for the new investors.
Great. And we're actually going to be doing a webinar on that in the near future. Actually, doing a series of webinars on underwriting deals, how to sell land, and about the incubator program. So if you want notes, reach out to me or Paul, or check out the links in the show notes. But for a lot of the people that have that hankering, the passion to go out there, want to put that on your radar, is that there's a lot of cool webinars coming up. So one of the things that you're telling me that you've done with some of your incubator participants is this deal in the Highlands.
Mm-hmm. Yeah.
walk the audience through high level what you guys are doing there.
Yeah, absolutely. So it was an old commercial site, and we took it through a rezone. Same thing. We actually started working on this back in 2020, got it through a rezone, and finally purchased it in 2022. And when we looked at it, it was 25 townhome units, but I saw that it was able to be split. We were able to get 6 different parcels out of that. So there's 3 duplexes, a 5, a 6, and an 8-plex. And essentially we said, hey, where are our investors that can invest in something like this? So we found our 6 investors who have invested in redT deals before, who have come up and said, hey, I would love to jump in on this. I don't want to, right now, multifamily is not the right answer. Commercial is not the right answer, but I'd love to start building something and have something to sell, 12 to 18 months from now. And so, we were able to get those under contract really quickly and actually closing the first sets of properties this week. So they're really excited. We've got all the agreements together, but the benefit for them is, they're signing on the loan. This is their property. They're not splitting anything with us. So ultimately they're signing the checks that go out, they're following budgets. And at the same time, we provide construction schedules where they can hold us accountable to meeting those schedules. So really for these investors, it is passive, but they're also able to learn along the way of how development and construction goes from start to finish.
So why did you divvy up from 25, 1 lot to 6 lots? What was the advantage there versus just, hey, one investor or you guys developing as 25 lots or 25 units?
Yeah, absolutely. I think, we like to diversify our capital pools because we work with family offices, we work with institutional equity. So we want to provide a space where we can have our friends and family investors and high net worth individuals jump in and do the same. So for us, we've got a lot of opportunities. So we just want to be able to grow and help others do the same.
Cool. And what type of experience and capital is required for people to participate in deals like that?
Sure. I mean, typically you should be an experienced investor, whether it be, doing some fix and flips, if you had 1 or 2 under your belt, part of, even like if you remodeled your house and just understand some of that concept. We'd like to have investors who have rental property in their portfolio, but guys who are looking to diversify and just look outside of doing something, try to do something new.
Okay. And I want to pivot back to like the other properties that you were doing as Paul the investor. Mm-hmm. I know you got the duplex in Villa Park that hit live, and then so you got a single family home in 5 Points and a duplex in 5 Points. Can I assume that most of your investing focus and your investing capital is going into development deals versus rentals or other investments?
Yeah, absolutely. I just, getting the first dose of development was a really life-changing moment. It just felt amazing, right? I don't think I'd ever call myself a developer, but it just feels. It feels different. It's exciting. It's new. It's quick. It's not something where I'm looking for a 5 to 7 year, sell out and being able to recoup equity. Then for us, these are in and out. If I can get in and out of these deals between 18 and 24 months, it's pretty exciting for me to focus on the next project.
Do you mind sharing like rough numbers on that, like that duplex in Villa Park? Like, hey, how much capital you invested and kind of what you expected out of it from like rough numbers or 1 or 2x deal?
Yeah. So we put about $100,000 as our initial investment on the deals, and my return will probably be close to between 2 and 3x. In this market, it might be significantly less than our initial expectations, but the good news is we've got margin in there to be able to lower prices and still be comfortable.
Okay. So maybe not quite as fat as you're expecting, but you're still profitable, right?
Yeah, absolutely.
Okay. And this kind of brings up the other thing, because, as we've been talking and you have said yourself, like, hey, you learned in 2008, you're like, hey, this sucks, but I learned, but I'll be ready the next time it's happening. And we're starting to see it happening again, the next like 2008 type recession. Now it's not going to happen in residential properties where, houses and condos are going to have a 30% decline. I don't think that'll happen around Denver or Colorado Springs or anything. But you've been talking about, as we've been looking at development deals and you've been showing me some of the numbers on them, you have been, I'll say giddy might be the right word, on like the type of deals that you're seeing in terms of like land value and margin. and it got me excited from just like seeing how excited you were, and then we started talking numbers. Can you kind of share us the landscape that you're seeing as far as the opportunity, the next 2008 crash, both as like you as an investor and what you're looking at as like the CIO at redT, because these are all different type of developments from small to big projects. Like, what are the trends you're seeing, and what's your crystal ball saying?
Yeah, the biggest thing here is that land has always been overpriced in Denver. The land
Always?
well, maybe not always, but in the last decade or so, I just feel like it's been super challenging to be able to buy land. I think the holders of land think they have $1 million property, on vacant land. It's in an okay location, but the seller's expectations have just been off the charts. So it's been really difficult for developers to, make deals happen. And you'll see this a lot in the Highlands where, a lot of older homes are being built around because they weren't a part of the bigger development. And now they're surrounded by all this new development, and now their property value has gone down significantly
because they missed out on
exactly. So we do see that a lot. With that being said, I feel like there's opportunities coming. We're seeing opportunities now because we hear sellers that are coming back and saying, hey, that offer 6 months ago that you made, I think we're ready to take that now. But for us, that price 6 months ago is not the price we're willing to pay today.
Could you give some just rough numbers or percent differences, help paint that picture, or like a certain area and some rough numbers?
I wouldn't know rough numbers off the top of my head, but I feel like what we were underwriting last year we thought was great, which was a 70% gross margin, and now.
And when you say that, you mean that like the entire project, right?
The entire project.
When you buy the land to when it's sold, you'll make 17% gross across everything.
Yeah.
Okay.
Right. And we said, how do we take this gross margin, that 70%, and knowing that big builders are in the mid-20s. So we said we need to take a look at this and see where we're missing. But as these land prices start going down, the difference is the big builders are out in like the suburban neighborhoods, where they're putting in all new infrastructure. For us, most of our stuff is in infill. So there is going to be a difference in margin because our land costs have been so high. What we think is coming, and we feel like is coming, is going to be in Q1 and Q2, where these prices will still continue to come down. And we're gearing up to be able to purchase and jump on these opportunities, knowing that the entitlement timelines are taking between 2 and 3 years to get permits. So we need to work on our stuff now to be able to deliver product in 2026, 27, and 28. The good news is we've worked on over 600 units of entitlement work and projects that are under construction right now, permitting and under construction. So we've got the next 3 years, feeling really good. But how do we start working on the future of that? And I think there's a ton of opportunity coming. We see the opportunities now, but we know it's not the right time to buy land. So we're being really patient. We're tracking, a lot of this inventory that's building up, and we feel that, like I said, when it's time to buy, that we're going to be in a really good place to do so.
And so you're feeling very bullish from that standpoint, like first half of 2024?
I hope so.
Yeah.
That's what we're hoping for. But I mean, if it continues to go, we don't know where the bottom is. But, for sure, we're not going to be sitting around trying to catch falling knives.
Yeah, no, it's that is a hard game to win. And so with that, the pipeline building, the other thing that I have seen from, other developers I know and just chatter, a lot of people have really pulled back, and you guys seem to be going more aggressive, or I would say more optimistic, maybe not, you're gearing up for this. For a lot of people, it seem like, hey, they're taking a break for it. But what's the sentiment like among developers generally? That's the vibe I'm getting.
Yeah, I would agree. I've hear a lot of developers say the same, but for us, we're still bullish on Denver. There's still an inventory problem that started, back several years ago. It hasn't been addressed. And even with these high interest rates, it hasn't been addressed. We know that the rates aren't going to stay high forever. So we feel that for the next year or two, being under construction and bringing these products to market is a really good good place to, bring inventory to a time where there should be more buying activity. So we're really excited for that. And I know that there's some developers who are pulling back, but I do know a handful that are, bullish with us because inventory, number one, and number two, we're building green product in desirable communities and urban infill development, which at scale, which is very popular right now. And that's why we're excited about it, because we know that the demand is there.
Yeah. Talk a bit more about the redT growth, or the redT growth plan here, because something that, you and I have shared on is, from investing standpoint, hey, focusing on this next opportunity as, commercial prices and land prices really drop, and kind of going all in on there as an investor. I've had the same mindset. Hey, I was in real estate in 2008, but when it happens again, I want to go all in on there. And then from a business perspective too, like I know like redT is going all in on like, hey, this is next wave. This is it. You guys are ready for it. And in terms of that, you guys are actually also doing an equity raise for redT to fund it. Could you talk about it from a high level? Because I think it's always fascinating and, kind of shows that you guys are eating your own dog food. Hey, we see this huge opportunity here and we are taking advantage of it.
Yeah, absolutely. That's exactly right. It's a unique way to raise capital as a real estate company, but we are selling a portion of our company. This is real equity of the company to be able to raise the capital to purchase all of these opportunities that's going to be coming our way. We've had a lot of interest from groups, but for us, we want to be able to work with, investors and people that know what we're doing, who really believe in our mission to, build a greener Colorado and to bring, necessary homes into Denver.
Yeah. And if you guys want details on that, let us know, because we were just scheduling a webinar, I think, for kind of early January. Go with a lot of details on that. Lots of fun stuff I've been looking at for a while. So like I said, I always love hearing other investors are shifting their portfolios. And also as a fellow entrepreneur, I love hearing what companies are doing, like kind of gearing up like, hey, big opportunities coming. Let's be ready to pounce on it. And so I share that excitement. All right. I'm going to jump around here. Something that just caught my eye as we've been working together is you have a really cool tablet system. You're an organized person. It goes into green stuff. You're giving me a demo before we hit the podcast here. Your remarkable tablet system. And so many people, myself included, are always looking for like productivity tips or, hacks, for lack of a better word. Tell us about this notebook, because it caught my eye. It caught Jules' eye. We're like, wow, that's pretty cool. Yeah. And I know other people out there are going to be interested.
Yeah. It's a digital notebook. It's been great to use. It essentially eliminated my need for little sticky notes or, little pieces of papers to take notes on. It really helped me capture all of that. It syncs up to the cloud. And then my assistant is able to upload documents that I need for meetings, so I can just pull it up without having to print or bring my laptop in. It's really light, flexible, and really easy to write on. It's got a digital eraser on the back, so it feels like it's real. But no,
on the stylus,
yeah, it does. But being able to create checklists, being able to create meeting notes, notebooks, and things that I can share. If I can take a bunch of notes and being able to share with the people in the room by email right on the spot, because everything uploads to the cloud, it just makes everyone's life easier. And for me, it's made my life that much simpler and more organized. When I'm having introductions, meetings with people, when I have my notes, I can send this to my assistant, who can then put it into the CRM system, which we use as Salesforce, and be able to store the information there without it getting lost or on a sticky note or a voice note. I've got something electronically, and that goes to my team, and it's been really convenient.
Cool. And you use this professionally and personally?
Yeah, absolutely.
Okay. And it's called Remarkable, right?
Yes.
Yeah, I'm really interested in it as well. And I know it's always been interesting as we've done on these podcasts. So many like the business tips and productivity tips, how many people like chime in on there or have anything. So check it out. I'm excited, everyone. I do actually want to go back and talk some more deals. Because one of the things that I have gotten into the last couple of years is, more LP investing, more just limited partner investing, development deals like redT, and syndications, all that. Can you walk us through, not through like the personal developments you're doing through the incubation program, but some of the bigger deals that redT is doing? I know you guys raise capital, and a lot of people are newer to, LP investing and newer to development deals. Can you walk us through like what those deals are like, how many, the project size and kind of the general turnaround time and how the investment works on there?
Yeah, absolutely. So typically these projects are between 10 and 30 units, and we're raising anywhere between, 1.5 to, $3-4 million or so. We bring on, investors that we've vetted that we know are real, actual investors. But yeah, we bring in investors by $50,000 chunks. A lot of our investors are between $100,000 and $250,000. But, we've got a lot of, new investors that we're working with that are in that $50,000 range. I'm personally invested in some LP deals as well, so I'm really excited about those. On these deals, redT through a waterfall is returning between the mid 20s and mid 30 IRRs for the investors after the waterfall.
Wow.
Our deals are really heavy. There's a pretty thick margin in our underwriting. And we underwrite to today's construction numbers and today's sales prices. And, over the course of the next, 18 to 24 months while we deliver this, we usually catch some appreciation, or if we're able to find savings on construction costs. So we feel like we're able to perform really well on these deals, especially because we're taking out a lot of the entitlement risk, because we say investors come in once we got the permits, and from there we can move forward. I think the biggest question nowadays is, how long are entitlement times? When is this thing going to get approved? And then holding costs will end up eating you up. So we've changed that model a couple of years ago, and, we're starting to find success with it. And, it's been really attractive to a lot of people. We're getting a lot of referrals, phone calls of people's friends and family that they talk about, LP investing. So it's really exciting, especially if there's a project in your neighborhood that that you can be involved with.
Great. Yeah, I'm excited to do more deals with you guys next year, both as an LP, put some deals together with you. So if anyone wants information, reach out. We were talking pipeline, and I've had I love kind of getting to talk shop with people because they'll show me their full pipeline of hundreds and thousands of, properties in the pipeline. Of course, a lot of them don't pan out, but that's part of the funnel. That's part of the pipeline. So really exciting stuff. Got a couple of questions for you here, Paul. Looking at everything going forward, now going to 2024 now, what's got you just most excited in general, looking forward at everything?
Man, really, it's this green initiative, just being able to bring sustainable homes. I know that our target market of buyers is really interested in being a part of this green solution, and not for us to sell homes, but for us to be able to educate other home builders and developers to say, hey, this can be done at a reasonable build cost. You can still make a profit, but still do good because it's the right thing to do.
Yeah. All right. I've been waiting to ask you this question, Paul. If you could go back in time and talk to young Paul, say 15 years ago, whenever you were driving around your Mercedes and all that stuff, what advice would you give young Paul, knowing what you know now?
Invest, buy real estate, figure out a way to get it done, house hack, room hack. Figure out a way to get it done, because prices aren't coming down anytime soon. Real estate is always really traditionally have gone up. And so it's really, you got to start building your wealth. And, if you haven't started, you got to start today.
To follow up on there, because I know we have a lot of, younger investors, people like you and me 15, 20 years ago, where, hey, they're getting started, they've got, small capital to go out there and invest. Do you still think it's a good time to house hack in Denver, house hack in the Springs? Like, what are your opinions on that?
Yeah, I think if you can find the deals, there are absolutely deals out there. There's ways to negotiate either, a seller. There's just so many ways to get a deal done right now. Absolutely. If you can qualify to get a duplex or a fourplex to house hack, absolutely do it right now.
Yeah, I totally agree too, because, we talk a lot of these, like AMX 2008, a lot of it's in commercial. So that is usually more for accredited investors, right. Usually investors older. A lot of younger investors still want to get in. The best time to buy real estate was always yesterday. The next best time is today. And for those of you out there who are not investing in like the bigger development deals or can't do it or starting out, please go out there, house hack. Go out there, do room by room. I totally agree with Paul's sentiment that there's still deals out there. You just have to adapt to what the market is giving you. Paul, this has been a fantastic podcast. I am looking forward to doing more podcasts with you, future webinars to dive into like the underwriting on development deals, the incubator program and actually putting some deals together as well, and just kind of getting you into the conversation here for what you're seeing in the pipeline for development for land, because you see so many deals coming across your desk. Like, I love learning from you. I know our audience will as well. So thank you so much, man. This has been great.
Yeah, thanks for having me. Looking forward to the next one. Thank you so much.
Thanks, everyone.